Hello and welcome to today's interview on the recent UK CPI data release. I'm Kiri Bloor. UK annual consumer price fell to its lowest in over 4 years in March of 2014. The inflation rate decelerated for the sixth consecutive month to 1.6%, but we now see a rise to 1.8%, which, although higher, is still below the estimated 2%. And we have Rob Harbron joining us on the line to talk us through the recent data release. Hello, Rob, and welcome along. Is this increase a one-off, or do you predict it will rise again next month? Many put the slight rise in CPI data down to air and sea fares. What are your thoughts?
The main rise for the increase in the inflation rate this month was due to the different timings for Easter that we had this year compared to last year, which, as you say, had an impact on air travel and sea travel fares. So we don't expect this to be the start of an upward trend, but we do expect inflation to remain about the level that it is now for the rest of 2014.
Some experts are suggesting CPI inflation could fall to 1% before the end of 2014. This perhaps looked more likely last month to now. How likely do you think this is?
Well, while we've got a number of international factors helping to keep inflation down well below what we saw in the past few years, including the falling price of crude oil in sterling terms and lower global prices for food, we don't expect inflation to fall as far as 1%, as there's still some pressures coming from elsewhere that are keeping it at around the rate as it is now.
The jobless rate is at 6.8%, down from 6.9% in the 3 months to February. Average earnings increased by 1.7% and still a lower than expected CPI. How much pressure is this going to put on the Bank of England to change its monetary policy?
So now, although unemployment is down sharply on a year before, the rate that we're seeing now of 6.8% is still well above the levels we saw before the financial crisis. There's still a fair amount of spare capacity in the economy, but we expect this to tighten through 2014, and by the start of 2015, we expect the Bank of England to start thinking more seriously about increasing its base rate.
Clothing seemed to have been a big factor in the dropping CPI rate. Is this because we are seeing a different type of retailer gaining a stronghold on the marketplace, such as Primark?
Well, the clothing price inflation data is quite interesting because we've seen over the past 2 decades, up until about 2010, we had year-on-year deflation in consumer prices for clothing, but this trend is now reversed. We're now seeing year-on-year increases in clothing prices, which is largely due to increased cost for labour in places like China as these areas develop, and the cost of producing these clothes is not quite as low as it once was.
And with the prices rising faster than wages, do you expect we'll see a drop in living standards?
As you say, currently consumer price inflation and wage growth is roughly about the same level, so we haven't quite seen a return to growth in real terms for wages, but as the economy continues to pick up and the labour market continues to tighten, we expect wage growth to pick up further over the rest of 2014. And as inflation is expected to remain broadly stable, we do expect wages to start growing in real terms by the end of the year, which will hopefully lead to an increase in living standards.
Finally, the UK GDP data is out on Thursday. What are your predictions?
We expect GDP in the UK to grow by around 3% over 2014 as a whole. And this would put it at its fastest rate since before the financial crisis, and potentially it could be the fastest for 2014 as a whole among all the Western advanced economies.
Thank you, Rob. That's all we have time for today, but make sure you check out Ben Jones's interview on Thursday, the 22nd of May, about the UK GDP data release. But from me, it's goodbye.